Hello and welcome to my sentiment analysis for the week of May 31st. Let's get straight to the charts. We are looking at my Forex chart for Euro USD with the current market on display. This is the monthly time frame, so it's the largest of the time frames. We can clearly see that the month has pretty much stayed intact with where we expected over the last couple of weeks. Now looking at where I put the blue line, this is where the recent range has been since July of 2025. So almost a year in this range. Now this does not mean the range is going to stay because it can change at any time. But it gives us a clear indication of where the market is right now. And if we take a look at the screen, we actually look at the order book in the background. So we have the buy side and the sell side. We can see where the order book pressure is. We can see where buyers and sellers want to be within the established pattern. And that is really the whole focal point of this discussion. We can see that the buyers are looking at this range, which is where the blue line represents the previous low boundary that the market has followed for roughly the 10 months we are talking about. And we can see where the selling point is still actually pretty consistent within the representations of where people want to make sales. So by looking at this metric, we can see that there isn't likely going to be a huge push outside of the range between the upper yellow line and the intermediate blue line. We can see that even in the last couple of purchases I've made, that range has remained consistent within the factorizations of the trade cycle itself. And in fact, when we look at how those buys and sells actually took place within the market, it looks to be slowing down, meaning the downtrend that we were exhibiting in the lower time frames has actually slowed down even more. And that's where we begin to see the potential of maybe a reversal that might push upward. But we don't know yet. So let's switch to the weekly chart. Okay, looking at the weekly chart, we can see where this last week clearly shows the upward trend. But we can see the previous several weeks in the downward direction. But overall, though, we see from the order book on the weekly trade cycle that we are still within the blue to yellow boundary with where we are at with the pricing. So we can clearly see that pattern is still projected, at least for the next week. But we still see, even on the weekly, that the bulk of the sells are within the upper range above where we are currently sitting at 1.16. But there are still some sells below the 1.16 to the roughly 1.13738 range. So as the market shows, the pressure in this range is still stable. Whether or not that pressure is going to push the market upwards is a different story, and I personally don't believe so. I don't believe so because I think there is not enough pressure on the buy side. I think we will get some remedial bump, meaning I think we're going to stay within the preliminaries of what we've been at. Maybe within this range here, as shown by the order book. But I don't think there's enough pressure to justify the upper part of the market as seen on the order book within the screen itself. Not yet, anyway. Next month, maybe, maybe not. But for right now, at least for the next week, I think we're going to stay within the shadow of the month of May when we enter June. I don't think we're going to see much of anything in terms of a major push. Kinda like this situation on the chart, but more showing like what we have the last 2 months. Just a third candle stepping up in a slow direction, or 3 white knights. Although that's kind of not accurate, but it's good enough. That stair step that gets us to the next point. So I think in terms of the market, we have that representation of what June will likely look like. Not the big push that we see on the marked candles. I really don't think we're going to get those big pushes. Now the news cycle can change that, but from what I am seeing personally, I think the problem is going to be more nuanced, more deliberate in terms of what's going to happen within the market. And I will cover part of that shortly in terms of why I think that. But I think it's a problem that is going to be, I don't want to say stagnation because that's not the right word for it yet, but I think the market will be flat over at least the next month, but most definitely over the next week. And that flatness, that shadow of the previous month, I think is going to be the biggest constraint of the market itself as we move into June. So let's get into some of the other metrics and really talk about what's happening on that note and on those substantialities. Looking at the actual profits, that is where I've actually made my profits, you can see I'm still drawing the negative swap rate, and I am still making profits here and there within the transactions of the market itself, the back and forth swings. I think it's important here to really press the point that I'm not trying to guess where the market is going, even though I have an idea of what I think will happen. The actual strategy I have implemented will react to it no matter what. I think that's the most important representation, because when we go down to the daily time frame and we actually see where the market is, we actually draw the spectrum of what the market is doing. We can see that my last real trades were very specific, very, very nuanced, and actually quite spread out. This is really the worst case scenario in play, because every time I think about reducing my volatility swipes to try to capture more trades, the market just feels too unstable, too much like it could go either way. And because I don't want to play guessing games and end up racking up a situation that could go against me, I have chosen to simply play it safe at the cost of future profits. Right now I'm holding only 9% of my margin at risk, and I'm keeping a significant portion of my margin completely safe, just because the market is unstable. And I say that in the context of the way the world is with the liquidity and fluidity of the euro USD. Because one of my biggest concerns, the way this market is dynamically set up, isn't that euro is going to climb against the USD or vice versa, or even isn't that they might drop. The biggest concern that I have with this market is that they're both going to accelerate upward, or they're both going to accelerate downward. That's going to be my biggest concern, really, as we move forward in the market. And that really is one of the major problems, I think, that the market represents the most. Anytime you have base versus quote, and in this case where the European dollar is the base and the USD is the quote, it isn't so much one going up against the other in a seesaw effect, because that's really the best way to go. That's the ideal market when you can pit one against the other. The concern I have is far more nuanced, and that being that if both markets go up or both markets go down simultaneously. And that's where the news factor comes in, and the concerns within the news factor that have made more cautious, more reserved in the market. Now we can really see on the chart for the daily, one of the points I was just discussing with the shadow of the previous month. We see that the wick of May just barely broke below the body of April. And that is something that, this is a daily. So we can see these wicks in terms of how they stay within the shadows on the daily. But if we go to the monthly, let's zoom this up a little more if I can. Okay, and here's what I was trying to say. With the monthly, we can see how the wick is almost to the level of the body. But we can see that April's entire candle width overshadowed May's. So that right there could be what they like to call a flag. We could be in the startings of that kind of a setup. Whether or not it is, only time will tell, but it means the market is definitely in an unstable area that is beginning to pressurize. Because if it continues to move in this direction, where it will at some point meet, and then a market decision is made where the market is either going to go up or down, then we could be at a influx of either the euro pushing high or the euro pushing low against the USD. Now the other problem is if this just falters out and goes nowhere, meaning the market stalls before it ever reaches that pressure point. And when looking at the order book on the screen and looking at where the sell pressure is versus the buy pressure, that could be a potential possibility. And that is something that we do need to worry about, because we can see that the sell pressure below the current market price, while not as substantial as above the current market price, it's still substantial enough that there could be some shorts sitting here, a rather significant amount of shorts, looking for the market to collapse in on itself, meaning expecting either the euro to drop against the USD or the potential of both markets collapsing and both sides dropping in value. It's just a matter of the ratio between the euro versus the USD in relationship to which one drops the most. But that's going to be the bigger problem, I think, that we will need to address over at least the next week to next month. So now let's move to other parts of the analysis. Okay, here is my GridBot metrics. My actual GridBot running that you just watched on no end with all of my inventory. The most recent changes to it, and most importantly, how those changes stack up. We can see for the month of May, my conservative approach only brought in $5 on this bot. Not very promising. But we can see so far for the year of 2026, I am roughly on track with matching 2025, maybe a little more. Right now, if we use extrapolation, my end of the year should be $84 for this bot. not award-winning by any means, not earth-shattering. But considering how long the bot has actually survived, being a grid bot, for the experiment this is working well, and it can be extrapolated up easy enough once I'm more comfortable with the market. But let's look further to an added metric that I have added to actually look at the days that I make the most money in the bot. Breaking this down is quite interesting because it helps me decide where is the bot the most profitable. Now this, of course, is the sales on these days. So most of my profits have come with Tuesday sales. Or I should say, in relation or correlation, Tuesday has been the most volatile in my favor. Now, ironically, Wednesday has been the most volatile against me. So I've made the most money on a Tuesday, and I've lost the most money on a Wednesday. That's an interesting bit of information that I can actually take into my trading to decide whether or not I would want to hold a position or simply wait it out until Thursday. But it's still some of the details necessary to help me make better choices. But that's really the significance of what we are discussing. Choices. So now let's look at the next part. In looking at the next part, we could see where we actually went through that big, aggressive down push, where we actually sold off all those positions quite aggressively. But from that, we can see what looks like a stable, flat market. That is, we're not making ground and we're not losing ground. So we had the market down push, but now instead of dropping, we're beginning to see a leveling effect, a flat, stationary effect. This is why I think really the next week and potentially the next month is going to remain in the shadow of May. I don't necessarily see us breaking out of that shadow. I don't see us making ground one way or the other. So from the standpoint of the market metrics, I think we're going to have this flat zone, what could be a stagnant market, but we'll have to see if it actually lasts that long. But overall, that's what I think that's what I think our next week is going to be. So as we look at the chart, I went to zoom out to show the bigger picture and the bigger range, and why I drew these blue lines. Now this is looking at the monthly chart, and we can see the boundaries I've drawn. The total range, the yellow lines being where my main body of purchases are, but then this blue line, the current zone, the current trend of the market that we've been in for the last 8 to 10 months. This is where I think we are going to be staying, at least for the next month. Looking at the weekly chart and seeing exactly where we are at, we can see that pattern more pronounced, more demonstrated, particularly with the order book in the background, and just how much the market really hasn't shifted. The equilibrium, if you will, between the euro and the USD is fairly consistent at this point. Now looking at the daily, and we can see that clarity more so. We can really see just how the market is shaping and where we might be on the basis of what the order book is suggesting. And by looking at the order book, we can see right here there is a lot of pressure in this area to drive the price up. Now, whether or not that is specific to large institutions, that's a good question that I really can't answer. but we see it's there. We see those limit orders waiting for whatever reason. And I think that's a critical point to keep in mind because it's still under the upper level we have been tracking. And when we look at the order book in that range, there's almost no real volume or liquidity in the buy-side order book at all. We have sell-side volume and liquidity, but not buy-side. So we clearly see from the order book where the participants want the market to be. And we still see the major push for the market to push downward. Now we don't see the strength that we had last week and the previous week for that downward push. But we do see there is interest. So I think this might be a short-term bump in the price before we turn downward. But again, I don't see a major influx outside the shadow of last month. So let me know what you think. Share your thoughts. How has your trading been going? Do you think we're going to pass below the blue line? Or do you think we're going to remain in our current range, trapped within the shadow of May? Share your thoughts. Leave me a comment. Thank you for watching.